Hello, and I hope you have been enjoying the course so far. Now, let's get into some advanced concepts. And a lot of the things that you were doing before are very important. But let me speak about something that really turned around my trading, and I believe is the absolute best way to conquer the market. And that is the philosophy of trend trading. Now, almost any course that deals with stocks, futures, or forex, you'll hear the trend is your friend until it ends. And most traders can recite that to you and say, okay, trade with the trend. But I don't believe most people understand and fully grasp the concept of trend trading, and that's why this is an advanced concept. This is this is a concept that often folks come to realize after years and years of failing in the markets. And this way, it up, up, using this method, it leaves your ego in check, and if you have the correct mindset, you can follow this method profitably. Okay, so let's get into trend trading. And as I said, this is what really turned around my trading, and quite frankly, I believe is the reason why I am a successful trader today. Okay, so let's get into trend trading, and we are going to be looking at a lot of chart analysis here. Now, trend trading allows you to make large gains consistently. So it's all about making large gains consistently. And it can be done on any time frame. So if you prefer to be a trader that focus on the 15-minute chart or the hourly chart or the 4-hour chart or the daily chart, it does not matter. This philosophy can be employed on whatever chart you may want. Just keep in mind that the lower you go down in the charts is the more trades you will get, obviously, and it's the more you'll have to pay attention to the markets. But this can be done on any time frame. And trend trading is 100% technical based. And that's one of the reasons why folks can't follow it, because it leaves, to be an effective trend trader, you leave all fundamental news analysis, etc., out the door. And I often listen to folks analyzing the markets, and the analysis would come in like, for example, they would say the GDP numbers are about to come out, and that should push the market up because of XYZ. And trend trading eliminates and ignores all of that. All we do is follow what the trend is saying, and that is it. Okay, now in theory, it makes sense, trend trading, but no one follows it. I have coached folks on trading, and I used to, when before I became consistently profitable, I did not follow trend trading. To be quite frank, I followed what I call counter trend trading, and that was when I analyzed most of the trades that I was making, it was counter to the trend and not following the trend. And I have coached folks on how to trade, and it takes a while for them to get the philosophy of trend trading, because when I coach folks to trade, it's a lot of practical work. So they will do a lot of trades. It's not just a theory course. It's about actually going out in the markets and trading the markets, and we correct errors, etc., etc. But anyway, most trades that are taken initially, because I would do an assessment before we start the program, and most trades that folks take are counter trend. And it and I believe that trend trading is difficult to do emotionally, and I'm going to walk you through an example of why I believe it's difficult to do emotionally. So to be a successful trend trader, it's completely unemotional. You have to leave all emotions out of it. What does that mean? You need to leave your feelings behind. You need to leave your politics behind. Politics has nothing to do with trading. Do not be caught up in a political philosophy and then automatically putting that into your trading, because more than likely you would end up losing money, because what you think the market may do, the market often just does not react to how you think it how you think it may move. And I'm going to give an example. And I'm going to give an example from gold. Okay. So let's get to some charts of trend trading. And before I get to the charts of trend trading involves buying low and selling high. Buying low and selling high. Trend trading, to be an effective trend trader, you do not need to buy the very bottom of a move. Say, for example, a market moves from point A to point B. A to B. It's not necessary to be effective to capture the entire move, to call the very bottom of a move and get out at the very top. That is striving for something that is unattainable. To be a good trend trader, the number one philosophy is, and you can say it, or not you, I don't know when a trend will end. That is the number one thing you need to understand, and number one thing you need to really grasp. When you enter a trade, your philosophy is, I don't know when this trend will end. So I'm just getting in the trade, and I'm going to ride it as long as the trend persists. Now, saying I don't know how long a trend will last is very critical. Now, think about it. There are a lot of folks out there that will say, okay, for example, let's say you enter a trade right here at the price is $12. Let's say it's a stock, and the stock goes to 25. There are a lot of systems out there that will say, okay, take off half of your positions here. You take off half of your positions and book a profit. But what happened if this stock went up to $300? You are missing the majority of that move up. Why? Because you are booking your profits too soon. And yes, there are times where you may get lucky and get out at the exact top. But what I find is that those times are rare. More than likely, and this is over the longer term, more than likely you will find that you are getting out of your trades too soon. So you remember, to make money in the markets, you have to, your wins have to be greater than your losses. That's how you make money in the markets. Wins have to be greater than your losses. Now, your wins being greater than your losses have nothing really to do with your percentage of wins. So let's say you take 10 trades and 7 out of the 10 are losses. 7 are losses. But for each loss is 1 point. So you get 1, 2, 3, 4, 5, 6, 7. -7. But what if each win was 3 points. Plus 9. Plus 9 minus 7 equals plus 2. So that's why when you see folks saying, "Oh, my trading system is 80% accurate, 60% accurate," so what? That doesn't mean anything. This is a trading system that's 30% accurate and is profitable. And on the other hand, you could have a system. Let me clear this again. You could have a system, and I hope you are taking notes, because I on this slide I did not make a lot of notes here, so you can take the notes. Okay, so let's go with a system that's 90% profitable. For each trade, you get 1 point. 1, 2, 3, 4, 5, 6, 7, 8, 9. 9 points. Plus 9. But for every losing trade, you get minus 10. Plus 9 minus 10 equals minus 1. Okay, so that is a system that's 90% accurate, but is definitely not a profitable system. And this ties back into trend trading, in that there are some trend trading systems that are not very accurate, but holding on to these large winners will allow you, they average out that in the end you become profitable. You take small losses but aim for large gains. And taking your profits too soon is definitely a recipe for failure. I can say anyone who advocates taking half of your positions off, market goes up, you take half of the positions off. I have yet to see a lot of any system really that is profitable doing that stuff, unless you are scalping. If you are scalping, it's a different thing. Scalping philosophy is different. It's a different philosophy. I'm not a scalper. I find that trend trading is much better than scalping. So if you're a scalper, that's different. But taking off, not realizing the full potential of the trade is not good. And what you're doing is you're shortchanging yourself, because what you're saying essentially is, I think the market will top out here, so let me take some profits. And the market could well and go up and up and up and leave you behind. Okay, so that is, let's go to some charts of trend trading now. Okay, here's a chart of the gold market. And gold is definitely the best thing to illustrate this. We could use forex charts, but gold is definitely very important, and because it ties everything in together. Now, looking back between, let's just go back. This is a daily chart of gold, and as you can see, this market is in a huge uptrend. It's marked in a huge uptrend, and what you see is higher highs and higher lows. And what the strategy is when you see a market in a trend is to be buying, is to be just going with the direction of this particular trend. Trade in the direction of the trend. And earlier in the course, we spoke about some entry techniques that combining pivot points and Fibonacci retracements, that you can take advantage of these moves. Okay, so, and if you want some more information on that, you can go back to the entry and trade management, I believe, sections of the course. But we're just looking broader picture. Now, this market was in an uptrend, and then in the US, you would hear, especially in 2012, you see that the market just stopped going up. Notice the market was in an uptrend. It started to move sideways, and then what you started to see, the lower highs, lower lows. This is a trend reversal. The market started to head down, lower highs, lower lows. Okay. Now, during this 2012 region, folks would buy gold up to 2011. And as the market was making new highs, folks would be buying gold. And a lot of instructors make you feel stupid when you buy a high. There's nothing wrong with buying a high. Let's say you bought gold at the very top, at the very peak of the market. Okay, you bought gold at the very peak. But the thing is, and the key is that when the market goes down, you have to exit that position. A lot of folks buy the markets and then they don't accept this small loss, and then this small loss turns into a much larger loss. So what they are doing, you are getting large losses, which is definitely not the way how to be trading and making money in the markets. So there's nothing wrong with buying a high, and trend trading, a lot of trend trading systems out there will advocate that you buy breakouts. Buying a breakout means that you buy the high. For example, let's say, let's look at this uptrend here. This is an example. Let's say you look at this. This was a consolidation, triangular consolidation. The market broke out of this consolidation, and let's just say you bought the high. You bought the high above here. You'll see that the market continued going up and continued going up and continued going up, 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 up. And then eventually the market turned around. And so if you bought at this point, at this high, at this point, you had no idea the market was going to go up this far. Let's say you bought this high here. Good place to put a stop, maybe 840, region 820, depending on your system. Okay, so you bought the high. A trend trader at this point of buying the market, a trend trader says to himself, I'm not sure. I don't know if this market is really going to go up or down. It has been going up historically. The market is in an uptrend. I'm just going to buy this market, and I am anticipating that it will go up. And if it does not go up, I have my stop loss in. And then what you will do is just trail the market via the, and if you don't have a trailing stop technique, you can use we spoke about exits with the chandelier exit earlier in the course. And you just hold on to the market until you get stopped out, because at the point of entry, you are saying, okay, I don't know when the market will turn around. So let's say, for example, we're talking about buying a new high. This is an example of buying a new high. Let's say we bought the high here. The market broke out to a new high. And it's making new highs. A lot of traders would not enter this market at this new high. Why? Because they are afraid the market will just turn around on them immediately. And they get scared when they see the market buying on a new high, and they say, oh, I can't buy the market because I have, quote unquote, missed the move. Oh, this move is mature, I have missed it, so I will not buy at this high point. And that is definitely counter to what trend trading is. Trend trading is, Yes, the market is in an uptrend. I'm going to enter the market because we're in an uptrend. Actually, what most folks will be doing here is trying to fade the trend and say, okay, this market is overbought based on the stochastics or based on the MACD, and I'm going to look to sell the market. And that's why a lot of traders can't make any money, because they are trading counter to the trend. So if you buy the uptrend here, the breakout, you see that the market went up and up and up and up and up. So trend trading philosophy, I'm just trying to really get you to understand, is you don't know. You're saying to yourself, I don't know how far this trend will go. I'm going to enter the market and I'm going to put in a good risk management. So if I'm stopped out, I will only lose a little bit. I hope you understand what I'm saying. So you're saying, I don't know where this market is going. I'm just following the trend. And I can guarantee you, if you do this enough times, you will see that your winners will start to become larger than your losses. You just need to have a disciplined approach to exit the market. And that disciplined approach can be, let's say you have a trailing stop that trails the market. Let's say you are a position trader, and you say, okay, I'm going to trail the market by 150 pips, or I'm going to trail the market 200 pips. Whatever that method is, you have to stick to it. So you can't enter the market and then get scared and exit and say, oh, the market, this has given me enough profit, let me just take a quick profit. Because if you bought this breakout here and the market went up, and you say, let me take a profit here, this is a new high, let me take a profit here. Well, the market went up even further and further and further. So trend trading says we don't know how far the market will go. Now, taking a look back at gold now, and as I said, these are advanced techniques, and I hope you are taking notes. Okay, let's look at the reversal in gold. The market started to go sideways. Now I'm going to demonstrate, and then the market started to go down. Let's take ourselves back to 2012, and we had a lot of money being pumped into the US economy. There were folks out there, there were advertisements out there about inflation is going to hit, and the dollar is going to sink, blah blah blah, etc., etc. A trend trader ignores all of that. A trend trader simply looks at the direction, what the prices are telling you. Now, the prices here are telling you, yes, you're in an uptrend, but you're seeing that this area of support is becoming significant, because the market, this is a daily chart of gold. The market came down, challenged this area, came back up, and it could not reach above this 1800. Then the market started to go down. So at this point, the argument is that this still was an uptrend. Now it broke out of this down below this major area, and then started to go lower highs and lower lows. That's where the trend shifted. The trend shifted and broke down below this channel. And this is where your market analysis will come in, because sometimes it can be the most difficult part of trend trading, can be determining where the trend is, or when a trend is ending and when it's beginning. Okay. So it broke down and you started to see lower highs and lower lows. So what direction should you be trading? To the short side. But this was counter to what was happening with the politics and the economic outlook at the time, because a lot of money was being pumped into the economy. Folks were arguing that the debt situation is getting out of hand. The Fed has record low interest rates. They are pumping so much money in the economy. So that will start to unleash an inflation tsunami. And what happened? And then folks would then go out and buy gold. I hope you see the error here. They are using politics, they are using fundamental reasons to say, okay, because these things are happening, then the market should act a certain way. And trend trading says that we can't predict the market. The market should act a certain way is different from what is happening in the market. You as a trend trader, you see that the market now is heading down. The market is going down at this point in time. So no matter what the politics is saying, no matter what the economic outlook is, the smart money, remember we spoke about smart money in the one indicator part of the course, is not on the buy side of this market. So you should be on the sell side. And I remember speaking to a client just about at this 1300 level, and he was telling me the reason why gold is going up. And I said, listen, gold has just broken out of a channel and is in a downtrend. I would not touch gold. And he bought gold around, I believe it was around the 1300 level. The market was up to 1400, and he was telling me all the reasons why gold is going to go up. It's going to go up because of the fundamental reasons I said earlier. And this example is so stark in my mind because we had a long discussion about it, because he was committing a large amount of funds to this position. And I said, listen, the market is in a downtrend. Okay, so the market continued to do what? It continued to go down and down and down. So his position essentially was underwater. And because it was such a large position, he was losing a lot of money on the position. And eventually he had to exit the market because he lost so much. Okay, so as I said, he lost a lot of money on that position, and it really was about not following what the market is saying and not following the prevailing trend in the market. Now, the downfall that some folks see in trend trading is that they can't and they don't take counter trend trades. Trend traders do not take counter trend trades. And some folks find that a problem because, for example, taking a look at this chart, you could clearly see that the market is channeling, and you could sell here, and that would be a good trade. But what I find is that, and I'm speaking about personal, what I find personally is that these counter trend trades, if I had 10 of those trades, yes, you'll have some winners in them, but most of the time, at the end of the 10 trades, I would actually be losing money. So yes, you can find some good counter trend trades, but when you put it into a system, or when I put it into a system, I was losing money. So I just eliminated all counter trend trades in my trading, and that definitely had a wonderful effect on my profitability. So I'm just speaking from experience. And I can tell you, as you advance in your trading, listen to this video again and again. It's difficult for beginners to grasp this concept unless they have done some trading in the past. But if you're a beginner, I can tell you, stick to the trend, the prevailing trend. If it's up, you should be buying. Say buy, buy, buy. If it's down, you should be selling. And this is an introduction to trend trading, and The rest of trend trading is kind of beyond the scope of this course. You can get into further detail when it comes to trend trading, and this is definitely a very advanced concept, and it it encompasses a lot of things. But if you really get this down, you can become a consistently profitable trader. I used to think that profitable traders were guys in suit and ties that you rarely saw, and it was a big mystery. But I can tell you, once the trend trading philosophy, I really got it. Because it's one thing to listen to it and one thing to actually get it. Once I got it, it really transformed my trading, and I started. And what you need to start to do is separate politics and feelings from trading. They are two. They are just separate entities. Yes, I have my opinions on the economy, but it has nothing to do with my trading. If you understand what I'm saying, it's just totally different. I don't say, okay, because this is happening in the economy, then that means the market will react a certain way. And that's how we're able to trade different currencies. And the strategy is, if a currency is in an uptrend, you are buying that currency. You don't care why it's going up. You don't need to know why it's going up. No, needing to know why it's going up is just of academic interest, really. If something is in a downtrend, you are selling. If something is in an uptrend, you are buying. Will you see counter trend trades? Yes, but we just ignore them. And having that discipline. Remember, in the introductory video, I said discipline and mindset is important. Having that discipline and mindset is something that you'll have to develop. Okay, I have said enough on this topic, and we will go into another advanced concept in the next video. Thank you.